Ross Gerber, President, CEO, Gerber Kawasaki Wealth and Investment Management. Glad to have you both on. Ross, I'll start with you. Investor Day for Disney begins shortly. The stock hit new highs yesterday. I saw 175 price target out with a buy rating from Truist, for example. Where do you think the company stands after some new highs this week?
Well, Disney has a lot of issues, and I'm sure Investor Day will sort of discuss this cross current that they're dealing with. So right now, internally, Disney's a mess. They're reorganizing the whole business. The way things were are not the way things are going to be. And they've relied very much on theaters to generate a lot of revenue. And the economics behind their movie business is changing rapidly. So, we had a 175, 185 price target before the pandemic. So it's really hard for me to continue to maintain that. I think Disney's fully valued at the current price. But I think if you're a long-term investor who's patient, it's a great opportunity, because I do think once the vaccine fully comes in and once the parks are open again, Disney will become a cash cow again.
And Dryden, what do you think?
Well, I think the people don't fully pay attention to the true value of the Disney brand, and also the fact that some of the capital that they have is multi-generational in nature. A good story is a good story is a good story. They're able to take these characters, The Lion King, Mulan, all of these things, and bring them out again and again and again. This fundamental creative talent and capital that they have is going to allow them to continue, I think, to do very well long term. And also, they're beginning to expand globally. And people forget that Disney owns a big chunk of Hotstar in India. I mean, right now, Disney Plus, Hotstar, all these, that's about 3.1 billion people in the world that have some access one way or the other, the markets that Disney's in. So as things turn around, and we go from country to country to country with recovery of COVID and all that stuff, I think we're going to see this resurgence of the company, in that they really fundamental capital is their brand and their stories. And as they're able to capitalize on those across, whether it's streaming or anything else, I think you're going to still see they capture the imagination of the world. And I think that it's going to be a very good long-term asset for them.
Okay, so more of a long-term play. You're all about the brand, the global positioning, the decades, and more than decades, generations that have loved Disney, and you think that has enormous value. Ross, it's interesting because when you talk about the fact that it's a mess and the reorganization that's taking place and what is streaming at this point, especially when you're getting competition left and right in the streaming world. I know they had a lot of signups, but for example, HBO Max is talking about now releasing movies in the movie theater and streaming, at the same time. Where does this all stand for Disney?
Well, I think, and I think the points made earlier, are very valid as far as the value of the brand. And I wish that was, more important as relative to execution of the value of the brand. And that's the issue that Disney faces, is exactly what you're saying, is that they need to go all in on the streamers. If they want to maximize the streamers, they have to go all in on the streamers and do exactly what HBO is doing. And, we've called on Bob Iger and the team, Bob Chapek, to release all 2020 releases, just like HBO, on the streamer, go all in, go global, and really just become a little bit more like Netflix. And then when your theme park business comes back, it's just a plus. But the issue that they have that we cannot gloss over is they just purchased Fox, and a lot of that is for production. Production is basically slowed down to a stop, and just doing anything in Hollywood right now. And I do a lot of music video production at my other company, and it is incredibly difficult to do anything production wise, especially big budget productions are costing almost twice as much. So this is just not an easy environment for Disney. It will pass, and I think long-term investors will be rewarded, but the short term is not that easy for them.
Who knew you were such a multitasker? How about a quick thought, Ross, on Tesla? You always love to talk about Tesla. And then I want to get to Dryden.
Tesla, obviously, it's our biggest holding. We've made a fortune on it, and I love Tesla more than ever. But we've also taken profits again in here. We think Tesla's a wonderful company that's more than fully valued, and their future looks great. But investors need to be careful with the stock this expensive. It's was $400 a month ago. So people have to keep that in mind.
But we're hearing targets of $750 and $1,000. Would you hold on and
it's
sort
that
of
same
wait for
people are
those
giving
over
it
time?
$20. It's the same. Listen, it's the same idiots who were giving them $20 price targets last year are now giving them $750 price targets this year. So it's just, that's what scares me. That's exactly what scares me. And Wall Street's giving them $750 targets. That's when you sell.
Ah, I see. Dryden Pence, what else do you like? Tell me what you do like.
Well, I think we like a lot of key companies that are part of this recovery that we're eventually going to have. Sooner or later, people are going to get back to doing all the things that they do. Certainly, I think COVID has forced massive increase in additional online activity and shopping. So obviously, we still think that the area of Amazon, Shopify, even Walmart, all of these companies that have an online presence are going to continue to see, not just because of COVID, but in a post-COVID world, behavior is changing. How we access things are changing. How human behavior has changed over time. And because of that, you're going to see a continued increased rise in what we watch, how we watch it. Ross brought up Netflix and those kind of companies. But then also all of this digital transformation is just going to increase further, whether it's e-commerce
and
or
that brings you back
content.
to Disney, right?
That brings us
that
back
brings
to
you back
Disney.
to Disney.
Absolutely.
Yep. It's great to chat
Absolutely.
with you both, Dryden and Ross. Thank you. Great conversation. Dryden Pence, Chief Investment Officer, Pence Capital Management. Ross Gerber, President, CEO, Gerber Kawasaki Wealth and Investment Management. Thank you both. Talking about Disney ahead of the Investor Day this afternoon.